Hey folks, I hope you're all doing well. And in today's video, I will go over a great concept that I believe you should add to your trading arsenal. And the name of this concept is the ICT Turtle Soup. And even though it may have a funny name, it is indeed a very useful and simple strategy. And this is, in my opinion, also a great trade setup for any ICT newcomers, okay? It's not very hard to understand, but it's very useful, okay? If you watch this video enough, you will understand this concept, okay? And it shouldn't take many tries. Keep in mind, this is how I personally utilize the turtle soup. This has previously made me money, and I frankly do not care what your previous mentor, friend, or mom told you. This works for me, so I share it. So what is the ICT Turtle Soup? Well, it's much like the 2022 model, but with fewer rules attached to it, okay? So step number one, locate a level of liquidity that is of any value. But what does that mean? Well, if you were to ask me what the highest value liquidity points are, I would say session highs and lows, old highs and lows, higher time frame, equal highs and lows, data highs and lows, that being the low and the high of an economic news event, and liquidity inside higher time frame PD arrays. But even though this liquidity is preferable, this is not needed. A higher time frame liquidity run with an SMT divergence is all you need for this model, if you ask me. Okay, so if we take a look at my screen, this is what I'm talking about. We have a 1 hour time frame here, and we have two relative equal lows, which, if you ask me, is a very valid point of liquidity and somewhere price could easily get a huge pullback from, especially on the lower time frames, because you're obviously not going to be executing this on the 1 hour time frame. In my opinion, this works the best on the 5-minute time frame for entries, that is. Step number two, once price reaches your point of interest and takes out the buy or sell stops, you simply wait for something to indicate that this is going higher. But what could that be, right? I noticed through literally thousands of hours of studying price action and through ICT that the turtle soup that plays out the best are when that liquidity sweep is combined with an SMT. But what is an ICT SMT divergence? Well, I have a whole video covering the ICT SMT divergence concept, but I will quickly go over it. Okay, so basically, an SMT is when a correlated pair takes out a lower high, but the pair that is in correlation with the pair that took out the lower high did not take out that very high, right? I have an example here on my screen where we have the NASDAQ 100 and the S&P 500, which are two pairs that are correlated, right? They move in correlation. So if we take a look at the NASDAQ, we have a high here. Let's say this high was made at let's say it was made at 1600, right? And then you look at the S&P 500, you find that same high that was made at 1600, right? Then you wait for either one of these pairs to take out that high. In this case, the NASDAQ took out the high, but the S&P 500 did not, right? So this would be a bearish SMT because the NASDAQ took out the high, the SMT does not. ICT noticed through thousands of hours of studying that once an SMT occurs, it is usually right before a big move in the opposite direction. So this is a great indication that price is going to move in the opposite direction after your point of interest has been taken, right? The liquidity has been swept. And a bullish SMT would be the exact same. Let's take this low for an example, right? Let's say the S&P 500 took out this low, right? But the NASDAQ did not, right? So then this now would be a bullish SMT, right? Because the S&P 500 took out this low, but the NASDAQ did not, which is a clear indication that price is going to trade higher, okay? So this is the only thing I would recommend when trading the turtle soup as your indication to higher prices, right? Step number 3. Once the predefined liquidity pool has been swept and you have had your SMT divergence on that very predefined level, you will then look for the first PD array that forms and enter off of that. Keep in mind that ICT says himself that the turtle soup does not need a market structure shift. So don't look for one and don't wait for one, okay? It's fine if it's there, but it does not need one. So the PD array could be any PD array. And I'm talking about an order block, fair value gap, mitigation block, breaker block, volume imbalance, anything, okay? The first PD array that forms after you've had your liquidity sweep is the PD array that you're going to take. However, I prefer the fair value gap. So if that forms, I will take that, right? Let's say a fair value gap forms and the very candle after forms an order block. I would rather take the fair value gap than the order block, okay? So what would it look like? Well, let's say if we look at my screen right now that we just swept this high that I marked out as the SMT, right? And I was trading the NASDAQ. Then let's say a fair value gap formed right here, right? I would enter as soon as price hit that. No market structure shift needed. The first fair value gap that forms on the time frame that you're looking at is the one that you're going to take. Okay, I recommend the 5-minute for your entries. So let's look at a few live examples. All right, here we are at the first example. We are looking at the E-mini NASDAQ 100 and the E-mini S&P 500 because they are two very correlated pairs, right? So as we can see, the NASDAQ took out the 7 o'clock low, but the E-mini S&P 500 did not take out the 7 o'clock low. So that would be an SMT, right? So what I do is I jump to the 5-minute time frame or lower. That's personal preference. I like the 5-minute. And then I look for the first PD array to form, right? Let's see what that is. Well, right here we have a fair value gap that forms, right? That we could take. We also have an order block right here that we could take. In this case, the order block was made before the fair value gap, so let's go with that. We place our entry at that very PD array and our stop at the recent low, targeting a 1 to 2. That is also optional. You could also target opposing liquidity. I like the 1 to 2. I find that it has a very high win rate, right? So we play it out and TP is hit fairly fast, right? Keep in mind that a 1 to 2, it has a high win rate because it is not a very unrealistic target. Some people like to go for 1 to 5, 1 to 10s. I don't. I feel like a 1 to 2 is just perfect, especially if you struggle with confidence. You will have a lot more winners using a 1 to 2 than you will have if you're using a 1 to 10, right? So that is what I recommend. This was the E-mini NASDAQ. And once again, it was because the NASDAQ swept the 7 o'clock low. The S&P 500 did not. We have a bullish SMT divergence. We go to the 5-minute time frame. We find the first PD array that forms and we enter off of that. Okay. So let's look at another example. Okay, here we are on the GBP USD and the Euro USD. They are generally a correlated pair, right? They move in correlation. So I found that the GBP USD swept the 8 o'clock low, but the Euro USD did not sweep the 8 o'clock low. Keep in mind that all these liquidity sweeps are found on the hourly time frame, right? So the GBP USD swept the low, the NASDAQ did not. I go on the GBP USD, I jump to the 5-minute time frame, and I look for the first PD array to form after the liquidity sweep has happened. Okay. The first bullish PD array, that is. Right, let's see, we have a fair value gap right here. And so we place our order here, stop below the low, targeting a 1 to 2, right? We wait for it to get filled on the very next candle, and that was very fortunate. All your trades are not going to look like this, but right, we put our stop below the low, targeted 1 to 2. We took the first PD array on the 5-minute time frame that happened after a higher time frame liquidity sweep that had an SMT divergence. Right, in this case, we also got a market structure shift. Keep in mind that is not needed, okay? Had we gotten a fair value gap right here, that would be perfectly fine. That was it for the ICT Turtle Soup. Keep in mind, this is how I do it. This is how I have had a very fine win rate using this very strategy. I primarily stick to the 5-minute time frame. You can experiment it with yourself during backtest, whatever. I'm showing you what I did. I don't trade this a lot anymore because I've found a model that suits me better, but that does not invalidate this model whatsoever. It is a great model. And all it is, again, is that you have a predefined level of liquidity. You wait for price to reach that predefined level. Once it does, you wait and see if there's a bullish or bearish SMT. If there is, you go to the lower time frame on the pair that you're looking at, and you find the first PD array that forms, and then you enter off of it. But I would not suggest going higher than the 5-minute time frame. That is my personal opinion. You can experiment, all you want yourself, find out what works best for you. Strategies requires backtest. It does not just require you to watch a video, okay? So I hope you enjoyed, and I hope I explained what the ICT Turtle Soup is about. It is not a very hard concept to understand. Remember, I have a video on the SMT divergence. If you're confused on that part, go ahead and watch that video. And other than that, I hope you enjoyed. And until I see you next time, stay blessed and bye-bye.